Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to break down the Consumer Confidence Index, why it's important, and why it was just such a horrific figure. I'm not sure if the live chat's working out in the YouTube land today. We just had some issues with it. I tried to get it lined up, but that seems to be the way of it in 2026. It's technical issue after technical issue. A lot of hacking going on, a lot of Cloudflare issues, a lot of issues with our Restream service. So all of this may be changing relatively soon. We may go to a different platform. We're not necessarily sure yet, but I am just sort of watching the live chat. So if something pops up, that's great. Okay, Tina, thanks for weighing in. Tina, welcome. Looks like it is working. Okay, Jason, Shane, good to see you. Andrea Garwal, always a pleasure, Andrea. Bobby Bob, let's see. Hi, Coach. Today we're having Trump speak. Will it bring impact on the markets? Kindly check out the US 30 and Great Britain pound Japanese yen. Absolutely. Will do. Lita, good to see you. Tuka, good to see you as well. All right, everybody, let's get rolling with this live stream. Eyes Hazy, Woza, good to see you. Good to see you, Eyes. The big thing we have to remember about Trump is that he is due to speak here in about an hour. I did a little bit of research on it. I didn't really see exactly what it's going to be. It may just be a press conference. It may be one of those cabinet meetings. I really don't know. But we do know that he's going to say some things that are going to move the markets more than likely. So I would expect some sort of commentary on the situation in Minneapolis. Right now, I think that supposedly they've struck a deal, maybe going to get things back online, draw down troops, but maybe they're changing leadership there. So who knows really what's going to happen. A lot of us were really looking at that Insurrection Act as being a possibility. It's relatively clear that it's probably not going to get invoked, and the reason why is it's an election year. So that big market disruptor that we thought may be headed our way probably isn't. As far as what we can expect out of Trump, I have no idea. You're going to hear me a lot in 2026 saying, I don't know. I don't know what he's going to say. Probably something, probably nothing. Who knows? My guess is he'll ramble on longer than one of my live streams, though. So if he does say something about the new Fed chair maybe, or a Fed chair nominee, that guaranteed will move the U.S. dollar. If there's an announcement about new tariffs or a tit-for-tat tariff or maybe a policy towards trade, that's going to move the market. Any announcements on potential kinetic strikes against really anybody will move commodities, specifically crude oil. We're watching closely. We have a trade idea out on that. So to answer your question, Bobby Bob, I mean, T-minus, 58 minutes until Trump talks. It's anybody's guess what he's going to say. No idea. My guess is he's going to laud the accomplishments of this economy, talk about the last year and all the ways that it's gone well. And right now, the consumer confidence figures we saw today do not show that. They are bad. They're really, really bad, and there's no way to sugarcoat this type of number. Typically, I wouldn't say that the CB Consumer Confidence Index is a market driver. I would say, this number sucked so bad that, there is a chance that this is going to be really perceived as a leading indicator of a potential recession, and it sets us up for really a great Fed meeting, an interesting Fed meeting. And a dreadful consumer confidence figure. Well, so in any case, we'll unpack the CB Consumer Confidence Index. We'll also look at our key markets. We'll get right out to price action right here. I don't want to wait too long. XAU USD, XAG USD. This is sort of the chart we've been watching on our MT5. Daily trends up. A little bit of action here in gold, but you'll notice that gold over the past, 24 hours, 36 hours has been the more steady commodity of the two. Silver had just an amazing pullback yesterday where we crashed back down, gave back all those gains, and then we immediately opened after the New York Open, the New York Electronic Open, up about 3%. So this stuff is volatile. Remember, your market closures, it's very important that you understand this for precious metals. The futures contracts are really dictating a lot of what's happening in the spot market right now. So what we have is a very close correlation of the spot price and the futures contract price. Remember, gold, COMEX future, right? COMEX, pretty much all the futures markets aside from ICE, the Intercontinental Exchange, and also the CBOE, the Chicago Board of Exchange. Everything but that is all under the CME Group's roof. They've bought every exchange out there, essentially. They've consolidated over the past 15 years. So that's really what we're looking at for a futures trade. That's going to open right around 6 p.m. Eastern, right around 6:15, I believe. It depends on the exact commodity, but I do believe that the gold open, the silver open was right around 6:15 or 6 Eastern time. So remember, it's about 4 hours, not 4 hours, but about 5 hours from now, the futures market's shut down. The brokers go through, the exchange goes through, they settle up all the contracts. They settle up exactly where open interest is. They look at their orders. They talk to their market makers, figure out where they're going to open price for the next day, the next trading day. And that's about an hour, 45-minute break each and every day. It's really important that if you're trading gold and silver, even on the spot markets, you know when that is because we're seeing a lot of volume kick off each new electronic day. And yesterday we saw it. I watched silver just jam 3% at the drop of a hat. And I said, wow, that is a healthy electronic open. And that's why the that's why the margins are where they are. Incredible volatility, incredible stuff. I'm really blown away by what's happening in the markets right now, especially metals. Stocks, I'm not really impressed at all. But metals, the charts don't lie. This is an absolute astounding daily range. You've got a high well up there right around 117.75, and your low was just north of 100. That is huge. For any commodity, a $17 range is absolutely huge. So you've got to really be careful when you're trading these commodities because you could be right. You could 100% be right and still get chopped out of the market, and that is not fun. That's not fun. So let me see. We've got a lot of folks here in the trading room today. Let's see. Let Let me see. I ain't touching silver with a small account again. It's hard. It's hard. The spreads are big. The volatility is huge. Daily ranges, the size that we're seeing in the silver market are really difficult to trade. Your entries have to be very perfect. They have to be really great because just the 5-minute bar, the size of the 5-minute bars is absolutely huge. Let me see. Zuhair, good to see a new name. Will you give a gold trade setup? Yep. We're going to look at gold here in just a second. I'm going to give you a nice set of retracement levels and potentially something we can sink our teeth into going into tomorrow's Fed meeting. 54 Cattle Company. What's up, Cattle? Shane, your thoughts on silver and gold if they topped out for now? That's $1 million question. All right, all caps from Zuhair. Will you give a gold trade setup? Hell yes, I will. Don't worry about it. I'll get there. Tell, please. I'll tell you. I'll tell you right now. We want to talk gold and silver. Everybody does. We did it yesterday for about an hour. We'll do it again right now. It's a great place to begin the live stream. UV, hey, how you doing, UV? Is your prediction on gold playing around the 5K mark yesterday played out to a T? The only thing that really frustrated me about that, was the wipeout. And gold, essentially, this is what you're looking at. Your gold market is clearly you're jamming. I mean, you're headed higher. There's no question about it. We called it relatively perfectly, but it was a real problem at 5,000 yesterday. Let's go ahead and grab a 5-minute chart, and we'll go ahead and show you exactly what we meant. The important thing to remember about a market like a gold right now, you're making all-time highs all the time. You really are. So let's go ahead. Let's dial in our key level. What I want to show you here is exactly what happened yesterday right at 5,000. Hard not to bid 5,000. It was obvious. It was a Captain Obvious trade. Everybody knew it. So what did you have here? So sort of going back to the 22nd of January, all right? Nice big runner. We're at the 27th now. And then all of a sudden, you're hanging out right around what happened yesterday. This is a 5-minute chart. That, very, very nice. It's very nice. But look at your low, 49.90. So if you're bidding 5,000, that's tough. That's a $10 draw. And once you sort of flushed that 5,000, you had a pretty good idea of what was going to happen from that level. I was looking for confirmation immediately. So let's go ahead and let's get granular here and show exactly why this was a challenge. I know this is sort of a deep chart work for right this minute, but let's go ahead and do it. Let's go to a 30-second chart, and let's see if we can find our little bubble. Sometimes it's very difficult to do. Okay, there it is right there. So initially, didn't feel very good at all about any of this. That's a staggering 30-second range. High of 5,007 to 49.90. That's a $17 range. That's why if you're going to trade a gold, if you're going to trade a silver, you've got to reduce your leverage because that is a tough position to hold. You couldn't hold that in the futures market. You really couldn't. It would be too big. So one thing you've got going for you on spot is you can dial that leverage way down to where maybe that trade only costs you, maybe a couple $100 to hold it. In the markets, in the futures market, trading a full-size gold contract, that right there is a $15 move or $17 move. So let's say I went ahead and I stepped up and bought 5,000. The low goes down to 49.90. So I'm on the hook for about $10, which is about what? How many pips is $10 in gold? It's horrible. Absolutely horrible. What is it, 100 ticks? Something like that. Remember, futures contracts in gold are done on a 10-cent ratio. 10-cent ratio, meaning 10, 20, 30, 40, 50, 60, all the way up to 100. That's $1. So each dollar is divided into 10 parts. $10 move is 100 ticks. Full-size gold is $10 a tick. So you're on the hook for, what, $1,000 holding that? Something like that. That's tough. Now, if we know the market's going to come back, I'll hold it all day. I'll pay $1,000 and hold it. But when that thing hits 90, are you sure the market's going to come back? Life's tough. Dial in your leverage so you can trade these huge range markets. If you're going to be trading gold and you're going to be trading silver, you've got to reduce your leverage or you've got to be absolutely perfect with your entry. Now, take a look at what happened. This is a 30-second chart. I don't trade a 30-second chart, but it's a good illustration of exactly what happened at our key level. Were the bidders there? Absolutely. Were the sellers there? Absolutely. What happened here? There was the debate. Buyers and sellers, where do we go? This right here is a classic stop hunt. It's a classic stop hunt. Now, a lot of people don't believe that stop losses get hunted. That's prima facie evidence right there. You flushed the whole retail world beneath 5,000. As soon as as soon as price came down and tested the water beneath 5,000, it was a massacre. The momentum algos jumped on it. It all happened within a few seconds, but the damage there was very, 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 very real. And then immediately the pressure's gone. You're back up to 5,000. You trade sideways. All right, we're going to sell it. We're going to buy it. We're going to do this. We're going to do that. And then you just trade sideways until what? Until the market finally breaks. And what happens from there? It breaks in your favor. It's an absolute light show to the top side until the next thing you know, in a very short period of time, you're up $60. That is huge. I mean, that's when we're talking about trading and trading high impact markets in a big, big way, in a meaningful way. That's it. That was the number on the books. We knew it. Was that a little too sticky? Yeah. What could you have done maybe to make sure that trade was a success? Expand your thinking. You've got to reduce your leverage if you're going to take positions in a market this big with this much what we call breadth. There's so many orders. There's so many people in there. You're going to have to expand your repertoire into saying, okay, Shane, you're a scalper. You love getting in. You love getting out. Well, what about the real potential of this market? Could you have risked $25 from there? Yeah, 26, 27. Maybe your stop out point was like, 49.70. Could you have done it and make it work? Yeah, you could have, but your leverage has to be small enough to be able to take that initial pressure. That's what it's all about. Very difficult to trade markets that are that big. Those ranges are healthy. So let's see. Zuhair wants a level. He wants a setup. All right, let's take a look at the trade setup. We're looking right here at our 920 EMA crossover on a 4-hour chart. You're not going to get anything on that. The trend is too strong. So let's go ahead and get that straight. Right here, we would have loved to have got like a real compressed 4 hours at 5,000. Then we could have just showed up and bid the market and not even worried about anything. I mean, essentially, you're just looking for ways to buy this thing right now. You got a little bit of compression setting up right around 5,100. If you take a look at these tops, what's your top right there? 5,111. How about this top? 5,105. How about this top? What do you got? 51 even. How about today? 5,103. So there's sellers at 51. In all actuality, this is the calm before the storm. This is compression before we break and go higher. So the only place I would even consider taking a scalp short would be up here at 52.50. Now, this may be a trade idea for maybe a little bit later in the week. I'll talk about perhaps how to do that. We sort of got a raw deal on last week's sell from just beneath 5,000. The market opened, gapped up, and nullified our trade idea, which I was not very happy about at all. But hey, that's life. That's trading. And for me, I would be looking for this market definitely to hit 52.50. I don't see any reason why it won't. The bidders are still in control. The biggest challenge that you have right now is that 5,100 level. So I'm not interested in selling anything. I probably would do a scalp up here, maybe 52.47.50, maybe 52.45. We'll see how aggressive we're going to do or we want to be after the Fed meeting tomorrow. That's absolutely huge. This right here, though, this is definitely what you would call compression in front of a key number. And if you look at that 4-hour chart, this is about as good as it gets for Elliott Wave. So we're getting to the trade level. We're getting to the idea. As far as what can we do to trade it right now with confidence, I would stay out of the way. Stay out of the way. You don't have to be a hero. You don't have to try to short this. But right here, 4-hour chart right behind my picture, there's your compression. Sort of there's what do you think? There's your break. I wouldn't call that much of a pullback. There's your 1, there's your 2, there's your 3. There's sort of a real tight 4, and then there's your 5. So you're resetting your Elliott Wave sequence at this juncture. For me, I would be looking very, very closely, saying, okay, what do we want to get accomplished here? What do we want to get accomplished here? You want to get long. How do you get long? Well, a couple of ways you could do it. If you wanted to use this type of trade right here, you could go right here to our 920 EMA crossover. What does that mean? It means when the 9 EMA crosses over the 20 EMA, you could buy the market. Now, I would be tempted to take this trade. I wouldn't have to sit in it very long at all. I'd be tempted to take this. Our gold bar is our buy signal. The only thing you don't have is you don't really have RSI confirmation. You've got your relative strength index trading right around 50, which tells you that this market's dead as fried chicken. It's dead as disco, but it's not dead. The bulls are there. The bidders are there. But this market, for the past however so many hours, you got a little bit of a move right there on the traditional COMEX Open, which is right around that 8:30 a.m. Eastern. There's your sell, and then there's the reversal. So what do you want to do? Do you want to go long or short? I'm long. I'm going to make my mistakes to the long. So could you afford to take this trade? Let's get out our paper trader. Let's have a look. Do we want to take this trade? Market order, what's our tick value? $1 a tick. Okay, let's go ahead and light it up. That's a lot of leverage. It's a lot of leverage because there's a ton of ticks in spot gold. All right, that's just know that. So if you're going to take a you got a 46 pip spread right now, and you're putting on $1 a pip. Ugh. I mean, that can get very, very expensive very quickly. However, if you're going to build this trade on a 30-minute 920 EMA, you've got to make a couple of decisions. Number one's your stop loss. Pretty good area right there. Pretty good area. Double bottom, put your swing low. What's our swing low down there? Right around 50.46. Okay, I like that. We're down there right beneath 50.50. Yeah, I kind of like that. What would my top side target be? Number one question I get from everybody. No question about it. Number one, bar none. How do I set my profit targets? That has to be a function of your personality. You have to say, okay, I'm a scalper. Okay, I want to get in, I want to get out. Great. Set your profit targets tight. Just don't go under a 1-to-1 risk versus reward ratio. If you do that, you're not going to be profitable over the long term. Let me rephrase. It's going to be difficult for you. You're going to have to win a lot of trades. You're not going to be able to lose, and when you lose, it's going to wipe out a lot of your hard work. So you've got to be in a position to where you're getting paid at least what you're risking on your trade. You've got to give that. All right, number one. Number two, your take profit. The big problem that we're going to have with this trade already, I can see it developing, is going to be your 51 level. That 51's been just horrible resistance up there for whatever reason, and it's been, fairly significant over the past 24 hours, 30 hours. So if you're going to take a trade like this, you've almost got to be betting that price is going to break up above that 51. If that's the case, you're probably looking at a profit target of at least a 1-to-1. If you want to base it on market structure, you don't have anything to really go on. You don't have anything to go on. You're making new all-time highs. So would this be the type of trade that you would take? Maybe trying to hit a home run. Maybe. It's not my personality, but maybe. Personally, I would see that 4,100 as being a major impediment to what my goal is. So if I'm going to take this trade and I'm going to take the added risk of having to nail 5,100 out of the box, then I'm going to probably put it on for a 1.5 to 1, something like that. Is this a viable trade? Of course it is. What are your parameters? You know where you have to get out. Trump's going to speak here in an hour. It may be a good idea. It may be a bad idea. Who knows? You know where you have to get stopped out at. You have to be gone underneath this swing low. 30-minute chart. All right. Right now during the U.S. session, tremendous volatility in the market. This is doable. This trade's doable. Now, your profit target, a lot of folks are going to go with a 1-to-1 like I do. A lot of folks are going to maybe try to leg it out to a 1-to-2 or 1.5 to 1. To me, I think you need to be paid a little bit for your time and trouble here because 5,100's a challenge. Once 5,100's gone and you catch bids above that, then odds are you're going to hit this. Is this still my personality, though? Am I okay taking that risk? No, I'm not. I want my profit target right in here. 1-to-1 risk versus reward. I'm not trying to get lucky. We just want the price to creep up a little bit. Is this worth it? Maybe, maybe not. Maybe it's better to take more. Is the timing good? I think the timing's pretty good. There's enough volatility. So that's what I would be doing, looking at the gold chart. You're looking for any reason to get long. And 30-minute chart, 920 crossover. I don't really care for where the RSI is here, but you've got a nice symmetric play, and you could definitely take the trade. It's just a question of what does Trump say and how does this pan out. So there's a trade idea for you, Zuhair. You can maybe look at that. As far as what my macro analysis would tell me, potentially I'm just looking to buy pullbacks. We'll talk about that towards the end of the stream as well. As far as silver goes, this is sort of our analytics that we covered on our switch markets, switch on hot picks of the week. Key level 125, key level 100. Okay, what happened yesterday? Saw really a tremendous run up to about 117, and then we pulled back down, and the low was right around 102. So the bidders were there at 102.50. That was a trade we had an opportunity potentially to call out. Didn't do it. In my view, unless you got some deep pockets, silver is really difficult to trade because the ranges are enormous. However, I would definitely be looking at this daily chart. This is much easier than the gold trade we just went over. The daily chart does give you a lot to go on here. Spike low back on the 21st of January. Right there, connect that to that spike high right up there at 117.72, yesterday's high. And your pullback is really nice. You've got some rotation. Can't really establish ourselves above 38%. Right now, the market's desperately trying to find an area of fair value. We're trading inside yesterday's range. What you would love is a late day pullback, maybe right down there around 100. 62% on the daily, the back end of our Fibonacci golden zone, 180. Key levels down there at 100. This is robust downside support. Robust. No question about it. So there's a couple of ways you can execute this. First thing you can do is maybe bid 101s. Call it good. Just be okay with maybe taking a bigger draw. The other thing you can do is wait for confirmation. So on a daily level, if I was going to play this, I'd be looking at probably a 30-minute chart, maybe even a 5-minute chart. And I would be waiting maybe for a test beneath that 100 level and then a rebound and a close and perhaps going long then. What that does is that takes that big sweep out of play. You don't have to go along for the ride. You could definitely just get into the market and have an opportunity to trade it, but you're just going to have to wait. So in a market as active as this, as crazy as this, it's probably a good idea to wait for some confirmation. Now, if you're aggressive, though, and you want that move no matter what, you're looking for a way to get long, which is the proper read here in silver. I don't care what anybody says. If you made money selling 117s, good for you. I mean, tremendous trade, but just know you're fading a trend that is astoundingly strong. I would love a pullback bid from about 101-ish. 180, but you have to dial your leverage down. You have to be prepared to take a bit of a draw underneath 100 before it rebounds. If you don't want to do that, you wait for your confirmation. You go down to a low time frame, 5-minute chart. Hell, even a 1-minute chart might give you a chance to see that quick rebound, and then you go long. The beauty of it, and what we really are looking for, is a test of the key level. The key level is what makes it sing. That's what makes the whole thing go. If you don't get a test of that level, then you don't get the participation, and it becomes really, really difficult to figure out what the heck's going on. One last thing I'll say about silver is this cup with handle. This might have been the call of the century if somebody got in on that cup with handle, grabbed that bullish break from about 85 all the way up to 115. That's a pretty good trade for being so late to the party. So not too bad at all. All right, everybody. Let me see. Got a few questions here to answer in the live chat, and then we're going to go get on with some of our fundamentals. We've also got a couple of trade ideas that we do need to address because they're probably going to come our way relatively soon, so I want to be ready for them. Okay, let me see. Gordon. Good to see you, Gordon. Hello. How are you? Doing well here. Let's see. What about the Forex pairs? Yeah, Willie, I can go ahead and look at Forex pairs if you have any that you'd like to look at. We had a request for the Great Britain pound yen. We're going to go ahead and I'll do that one next. Because I think that's a pretty good trade idea. Yes, sir. Good to see you. Yes, sir. Team Arena. Good day. How are you? Let me see. Gordon, should I switch to a trailing stop after I reach a 1-to-1 profit? Good question, Gordon. Good question. Jennifer Goodman. Hello. Hello, Jennifer. How are you? Doing very well here. Thanks. Gordon, should I switch to a trailing stop after I reach a 1-to-1? A lot of traders do. That was actually the basis of a mentor here. That when I first started working at How to Trade or doing live streams and talking with traders and posting trade ideas and things, one of the mentors there was a firm believer. His strategy was all about buying supply and demand zones, buying and selling supply and demand zones. And what he would do is the market would go in his favor 1-to-1, and then he would move his stop to break even and say, okay, it's a risk-free trade. Now, a lot of traders love that. A lot of traders really love that. For me, I don't like it so much. I've had so many opportunities to trade really live markets, and when you get into a live market, you don't necessarily want to get stopped out of it. So I like going with my original trade idea until it pans out. But like, let's say you're going to go to a trailing stop at a 1-to-1. So the question is where are you going to start your trailing stop? Is it going to start at break even and then move up? Or is it going to be activated at its original stop loss location and then move up with price action as it rotates above 1-to-1? Be a good question. If you have the answer, Gordon, drop it in the live chat and I'll go through the scenarios. But it's one of those things where you have to be very, very careful with trailing stops. A lot of people really love them. A lot of people hate them. I'm one of those people that just doesn't like them. I believe they make trading very difficult. And when trading gets difficult, typically we make mistakes. All right, Great Britain pound, Japanese yen. This is sort of an interesting type of a market. We looked at this one yesterday. Really liked it because we have potentially a great level right there. So this would be an area of what I call convergence. I've got my 13-period EMA. In this case, it's a 13-week EMA. It's closing right in on our 38% retracement at 208.85. So this guppy, this Great Britain pound, Japanese yen, is trading about 210.50. For me, if you get that pullback down to about 209, maybe 209 and a quarter, probably going to be a pretty darn good buy. So we're about 125 pips off of that right now. So if we do get an opportunity down there to bid, I would definitely be bidding. As far as what could we do right now, we sort of had a conflict yesterday. I was explaining how you could potentially sell these things and look to buy them at the same time. The idea yesterday was relatively straightforward. Spike high there, spike low, and the sell was essentially, your sell was right there at 38%. We talked about 211.50. The high right there is 211.76. Could you have won that trade? Yeah, more than likely you could have. You could have been in it for potentially 50 pips, maybe more. It was a good trade. Came right up, though. You went ahead and hit your 38%, rotated a little bit higher, about 25 pips or so, and then just completely reversed and paid you off. So that one was all about how long do you stick with the trade. For me, I thought it was a pretty good trade. But the question became, Shane, how could you say trade to the short and then look to buy down here? And I said, well, we're fluid in our thinking. I mean, we can make money to the downside and to the upside all at once. We really can. The only question is where's our profit targets? How much risk are we taking? What are we looking to accomplish? This bid from down here is a much bigger trade. This would have been a premium intraday scalp, maybe potentially could have turned into a swing trade if you wanted more out of it. But it was a really nice trade on the Great Britain Pound Japanese yen. So for right now, Bobby Bob, if you're looking to trade this one, very difficult. Very difficult because about the last, 10 hours or so, but the last 8.5 hours has just been flat. So I would be on the sideline firmly, but definitely watching downside support down there right around 209. I think that's a pretty good level, 209. If you wanted to sell up here again, 211.51, you could do it. You could do it. You just got to be sort of cautious about exactly what you're going to do there, because once it's been hit, typically once these levels get hit, they get what I call saturation. They reach a saturation point where they don't function anymore, and that can be a problem. All right, so definitely keep that in mind if you're looking at the Great Britain Pound Japanese yen. We also had a question on the US 30. For me, the US 30 is relatively simple. It's not hard. This is not a hard market to trade. Right now, you're sort of coming off a little bit. You're off about 500 points. This is just chop. Still relatively bullish. I mean, we're still in a bull market. There's no doubting that. You've got a lot of things coming our way that are really going to lead to what is a bullish setup here for U.S. stocks. There's no question about it. A lot of it that ties into the DXY. I'll talk about that in a minute as well. But the big round number of 50,000, more than likely going to serve as a magnet. So I think that we go up there and test it. We've got a trade idea out in the circulation where we scalp from just beneath that 50,000, but we're not there yet. Right now we're printing about 48,928. So what do we want to do? Do we want to buy or do we want to sell? Well, I mean, for me, this is starting to get like pretty tight quarters. I mean, we're trading inside of a phone booth here, very tight. Spike low, spike high. Sort of maybe you want to buy a late day scalp, 4804s, 4805s, maybe getting a slight bump back up into that golden zone. I could see that. This down in here, though, 48,583. It's doable. There's nothing wrong with it. I mean, those are both bids, but they're both intraday bids. You're looking to get in and take a few points and get out. You're not trying to take a position. Now, if you're looking to grab a position, my bias is still relatively straightforward for the US 30. I think you're looking at really a market that, there's no question about it, that a bullish bias remains warranted. There's no question in my eyes. I have no desire to try to short this thing. I'm not interested. I don't want to fight trends. The trend is definitely up. You could go with that last, 5-week range, 4-week range, January's range, I suppose, right there, December. So there's December's low. Or not December's low, excuse me. That was sort of the final trading week of the year. That low right up to this high. And then what do you got? A pullback to 62%. Maybe 48.5 and a quarter is a pretty good area to bid. Maybe 78% of 48.2, maybe 48.2 and a quarter. That's not bad down there. That absolutely is not bad. Why isn't it bad? 48.2 and a quarter-ish. You've got an EMA, a 13-period EMA down there, 13-week EMA. At 48,152, that's my bread and butter. That's going to be a pretty good zone if we get an opportunity to bid it. I don't think I would hesitate. The trend is up in the US 30. I would be looking to play this thing until we test 50,000 to the top side. Be that as it may, the trading is flat right now. So be careful with this stuff. Manage your risk, 1 to 3% on any given trade. Don't let these things get in your pocket. Don't lose all your money on one trade. The thing about trading is once you lose all your money, you can't trade anymore. Can't trade anymore. Don't care how much you want to trade. If you don't have any money, you can't trade. So you got to preserve that capital. All right, let's see. We've got Got a few other questions in here. Eyes Hezzy. Check out the Euro USD and Great Britain Pound Euro USD for me, or Great Britain Pound USD for me. Absolutely. We'll run through that in a minute. Jennifer Goodman, what hours do you find have the most volatility? Well, Jennifer, for me, my premium trading hours, London US overlap. No question. That's when the participation is. That's where the action is. Now, you're talking about volatility. That's a little bit different than having a good deep market. We're seeing tremendous swings, like I said, right after the electronic open in the afternoon for me. So like 6 p.m. Eastern, 6:15 p.m. Eastern. We've seen some significant moves in the futures markets the last several days. Now, typically, you don't get those, but right now, you're getting them. Consistent volatility. You're looking at that London-U.S. overlap. So you're probably looking at about 8 a.m. Eastern time all the way to about 11 Eastern, 11:30 Eastern, somewhere in there. So for me, Mountain Time, I'm looking at about 6 a.m. to 9:30 a.m. You'll have to check your GMTs wherever you may be in the world. But realistically, the lead up to the U.S. Open and probably the 90 minutes after the U.S. Open is the most consistent volatility and participation pretty much in the financial world. So that's what I would say, Jennifer. Let's see. Tina Jean, good to see you. Tina, Euro USD and Great Britain Pound USD are both quite bullish. All right, let's do it. You guys want to look at the Euro USD and the Great Britain Pound USD? Let's get on it. All right, we do have a couple trade ideas, and I want to look at the DXY too before we sign off, and we've got to talk consumer confidence. Don't let me forget to do that because today's figures were significant. All right, so what did we have cooking here for the Euro USD? I had a trade idea out not too long ago. It was a pullback bid from right around 114. So our low was 115.78. I'm kind of bummed out that we didn't get that 13-month EMA. I believe we were buying 114 and a quarters. That's really no longer the case. Your EMA is up there to about 114.21. So you could definitely be doing something like that with it. If you get a pullback down in that zone, probably pretty good, but that's 500 pips away. That's 500 pips away. So what I do in a situation like this is I get rid of all of my analytics and I start fresh. Monthly chart. Remember, markets have memories. They know exactly where they've been. And so do all the traders and the institutions and everybody involved knows exactly what they've traded at different periods of time. So what we have here is an interesting situation. We've sort of got a swing high, a nice peak right there in 2018. That's interesting. And then this area right in here, December of 2020. So what are both of these things saying? Both of these charts. Right down in here, January 2016. Okay, this was an election year. Right there, January 2017 was when? That was when Trump was inaugurated for his first term. So what happened to this Euro USD? The dollar got crushed. Why do you think the dollar got crushed? The dollar got crushed against the euro because everybody knows what Trump wants to do. The Trump administration wants to do. They want to devalue the currency, no question about it. They want to cut interest rates and they want to put more dollars in circulation so people can buy things and support economic growth. That's the plan. There's no arguing that anymore. I've heard a lot of economists and people on CNBC, and they're going on and on and on about policy. I go, hey, guys, it's easy. The bottom line is this. The administration is going to try to cut interest rates any way that they can. The lower cost of capital supports economic growth. Everybody slaps themselves on the back, and they go out and they have dinner at Mar-a-Lago. That's what they're thinking. The reason why it's going to become a reality this year is because you're going to turn the FOMC over. You're going to appoint a new Fed chief. You're going to appoint, new FOMC members are going to be up for confirmation. That process is probably going to pack that central bank with doves, people that want to cut interest rates. That's the bottom line. Now, that's exactly what happened here in 2017 to the Euro USD. So what happened? Okay, you bottomed out right down to 104, and then you went up. And then this crazy thing happened. What happened this time around? COVID. Unlimited quantitative easing. The United States overnight. It was an emergency meeting on a Sunday. Jerome Powell came on and he said, we're cutting interest rates to zero effective immediately, and we're going to provide as much capital as we need to get through this financial crisis. Probably the worst idea the Fed's ever had. They put way too much money into circulation too fast, and we're still dealing with the problems. The problems are inflation. So what's happening now? Okay, so that's where we were in 2020. You can see sort of that monthly doji, and then we rallied from there as the dollar got weaker and weaker and weaker. And then what happened? Inflation was a problem. Then they started raising interest rates, taking the slack out of the market. And then it just sort of hit no man's land. This was really easy to trade. This stuff, range bound every single day. Easy. Okay, and then you come back here. Then what happened? Now you're back in business. Trump's back in, and the same thing is happening again. So if you're looking at maybe an area where this uptrend is likely to fizzle, it's going to be somewhere around those yearly highs. It's going to be right around to what 2020's top, 2021's top, and 2018's top. This area right in here, it's going to be a sort of a combat zone. It's going to be a fight. Are we going to move higher or lower? Right now, I don't believe there's any which way to trade this that doesn't point to just going long. And that's with the Fed meeting coming tomorrow. So it's going to be added risk to take an intraday trade right now. But in the macro sense, that's where we're going. So what does 125.79 and 123.49 mean? It means 125. So you got this zone, and then you sort of got the big time, big round number right in there at 125. That's the one I would be watching. So I'd be bullish right up into here. 123.50-ish could be a great topside target. So how do we trade it right now? You're just waiting for pullbacks. This area right in here, if you're a chart, I don't know what you'd call that, a chart pattern aficionado. What is it? It's a bullish pennant. You'll notice that we're doing a lot of pennants nowadays because things are trending. There's your bullish move. February 2025, boom, there it is. Compression, 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 break. You'll notice that I don't include this right here into the top of my pyramid. We can if you want. There's no need to. That right there just washed everybody out, washed all the retail shorts out. Then the market loads up, and now we're moving. Why are we moving? Because policy is going to get dovish in the United States. The dollar is literally crashing right now. We were talking about it for the past several weeks. This entire year, you're off almost 1% today. The DXY is down to 96.20. It's because the verdict's in. You're going to cut rates aggressively. This right here, big move up this month. So how would you trade it? Maybe on a 4-hour time frame. You're just looking for a pullback. Very simple. A pullback, something like that. 119.36. That'll be a great scalp. Step up and bid that. Maybe look to take 20 pips off it, 15 to 20 pips. Right now you've got a 1.6 pip spread. You can get a better spread than that, but this is a through this vendor it's about 1.6. So you're going to want to make sure that you do your best to get a pip or under trading the Euro USD. I believe you can do that at Switch Markets. Go ahead and check that out over at Switch. But something like this, 119.38 maybe, that could be a pretty darn good trade as we roll into the late session. Great Britain Pound USD, going to be similar. I'm not really going to walk through all that analytics. We'll look at it in a second, but the eventual trade idea is just buying pullbacks. This right here on a 4 hours of just prima facie evidence of compression. I mean, if you're an Elliott waiver, a lot of you are. Compression, break, there's your 1. You didn't even really get a pullback. That's a really lazy 2, and now you're onward and upward with a 3. You're definitely going to want to be looking to grab pullback longs here. So something like this. Spike low there, maybe right to your upper extreme, wherever that does land. And then you're really looking hard at those 137.45s, somewhere in there. But the market has to set up for you first. It's got to set up. That means this pullback has to be significant. Does it develop? Couldn't really tell you. Let's step back to the monthly and see exactly where the pound is. I mean, always remember that the view from 10,000 feet, typically the right one, or shorter time frames scare us. They confuse us. Okay, so right there, what do you got? Last year's high, July of 2025's high, 137.88. What's this year's high? 137.91. So right now you're trading above last year's high, sort of moving higher. This right here is an interesting zone. I would keep a close eye on what happens here. As far as bidding, probably going to look to bid pullbacks. As far as where's the next level, we get right into that same type of analysis. February 2021, 2021's highs right there. Then what happened back here? There's your 2018 sequence, right? We're getting into these long-term levels. So that zone right up in here from 2018, same analysis we just did, is somewhere you're going to be right in that area from about 234 to somewhere right up in this zone to 144.50. That's going to be an interesting battleground. We'll see how it pans out. For me, though, it looks like we're breaking bullish. So how do we get long? All sorts of different ways to get long. It's just a question of what you want. What strategy do you want? You could look at a 4-hour 920 crossover. You could look at a 30-minute. I wouldn't go any lower than a 4-hour on this, though, and the crossover's probably already gone. So we'll be looking at pullbacks. I would love daily pullbacks on the Euro USD and Great Britain Pound USD, maybe weekly pullbacks. We're going to be all over these. Right now, the Forex is moving. The dollar is crashing. There's no question about it. This came from the video that we put out this week, our Switch On Hot Picks. You can see that the market's bearish. Dollar index, U.S. dollar index. Trump gets inaugurated right here. Everything goes. There was your sell signal right there back in May. We even knew that. April's crash. There's the rebound. Crossover develops on the monthly. And now you're just playing that long-term bearish trend. If you wanted to try to find a downside target, if you're a smart money trading concept aficionado, sort of there's your trough. 92. My target's 92 to the downside for the DXY. 90 to 92. I think we get compressed there. Do we sell out? I mean, do we actually go down and maybe test those February 2018 lows? I think it's really possible. Do we get into this stuff? The crisis zone? Remember that? Many of you weren't around then. I was. The financial world was ending right here in 2008. It really was. That was the end of the dollar. A lot of people said, that's it. It's over. And then you rebounded and you came back. But really interesting stuff here. Are we going to get to those levels 12 years later? Probably not this year. I think it's pretty much a certainty we're going to trade 90 or 92 down there, though. Just looking for a weaker dollar. That would be the market read for this year. So hope that helps on those pairs. A lot going on. I mean, they're going to be a lot of fun to trade. You're going to be able to make a lot of money trading the majors because the U.S. dollar is finally moving. And it's just about getting on the right side of the pressure. All right, we're going to talk some fundamentals here in just a second. We got a couple of other things that we got to talk about. 2 trade ideas that I'm going to cover, but I'm going to do it fast. So listen up. If you like them, great. If not, that's okay too. Let me see. T. Marina, dilute the dollar. That's when COVID hit 100%. No, you're absolutely right. I mean, I'm way late back to the chat, but you're 100% right. Let me see. T. Marina, Shane, what can we expect from the Euro USD when the government shuts down this month? It's looking like maybe a Friday shutdown. I genuinely don't know. T. I mean, I have a feeling that there's a crisis in here somewhere, and it's not a geopolitical one or a social one. I think it's going to be a financial one, and that'll pretty much sink the Republicans in the midterms. What could it be, though? Well, let's put our thinking caps on. If we're calling crisis this year, what could it be? Could it be a debt crisis? I mean, we have a pretty good idea that the Democrats aren't going to really deal with the Republicans on anything. They're really not. So when we start talking about getting a budget passed, I didn't really talk much about it at the time, but a few weeks back, I believe it was 3 weeks ago, there was a representative from Northern California, House of Representatives from Northern California that died suddenly. LaPalfa, I believe his name, LaMalfa. Nobody's talked about it, but with his death and Marjorie Taylor Greene's resignation, you're down to what, about a three vote cushion in the House of Representatives for the Republicans? That effectively means a budget doesn't have to go anywhere. So could you expect a budget to be passed in the United States this year? I don't think so. Now, the Democrats are motivated. They really would like to shut the government down and just sort of stall this whole thing out until you get to the midterms. That's what it's all about, just sort of running the clock right now. They've threatened to do it. They say they're going to do it over ICE immigration funding. They want all that funding cut. They want everything to go back to normal here in the United States. If the Republicans capitulate, then maybe they can get a budget passed. My guess is Trump will sign any kind of budget they get because they're going to have to. So to answer your question, this is coming to a head in a big, big way in May, April and May, maybe sooner. But they've threatened to shut down the government as early as, I believe, the end of this week. And that means that they're not ready to pass a stopgap measure, which is similar to what they passed last fall to get the government going again. It's hard. I hate politics. I don't like covering it because they really roil our markets. That shutdown could screw the dollar up. If you're devaluing the dollar and you're cutting interest rates and you're trying to get economic growth going, What does that mean to a budget? What does it mean to the broader U.S. dollar? I honestly have no clue. You'd have to call up John Maynard Keynes or somebody to form a hypothesis there. I mean, I could come up with one, but it would be complete nonsense probably. I do know that it's going to bring volatility, T, and that's what we need. I mean, that's what makes it all go. All right, guys, let's get on to our fundamentals. CME Fed Watch. I'm going to be live for you tomorrow. No, we're going to cover the Jay Powell presser, and we're going to do it live. And I'm going to talk about Jay, and I'm going to talk about what he's up against with his the charges that have been brought against him. They're perjury. They haven't brought charges yet, but I have a feeling that the DOJ is investigating, and they've got him on congressional testimony. It's all on tape. He could be up on perjury charges. And if so, what does that mean to Fed policy between now and May or June? Who knows? I mean, nobody knows. So right now, 97.2%, the market is pricing in an about face and no interest rate change for tomorrow. So this is interesting. Month over month, always important to look at where we were. In order to know where we're going, we got to know where we've been. At the 26th of December, right after Christmas, 82% believed this was the case. Now it's 97%. We're pretty sure that you're going to hold interest rates static tomorrow. I don't think there's any way they move. How about in March? March still sees about an 82% chance of interest rates staying where they're at. How about April? April, 70%. The market's starting to read it the way that I read it. And that means that Jay Powell, maybe even for spite, is not going to cut interest rates for the rest of his term. Fascinating. So where are the rate cuts going to come from? They're going to come from the next Fed chief and the next FOMC. That's what's going to happen. And we haven't even got into the mortgage fraud allegations that were brought against an FOMC member. We'll talk about that maybe tomorrow as well. I'll have to look into what's going on with that case. It just sort of went away, didn't it? But that's what we're looking at here. We're looking at probably a hawkish Fed tomorrow. I'm curious to see Jay Powell's tone. I think after last week's PCE figures showing that inflation remains high, I think that you're going to see Jay just come in and say, listen, we can't. The jobs market's better than we expected. It's resilient. The economy's in a good position. It's in a good place. PCE, though, it's persistent. I don't think he cuts interest rates. You're not going to get a rate cut till May or June. That's my opinion. What does that mean? Why is the dollar already falling then? It's because we know it's going to happen later this year. It's going to be a mass exodus. Let's just check our odds. I've been sort of harping on these December odds of a rate of interest rate cuts. And you'll notice that this distribution, I'm calling for something down in here. More than likely. I would take this bet, 2 3/4 to 2. Somewhere down in that range is where we'll end this calendar year. I'm not 100% on it. Nobody else seems to think it. But you're starting to see some people believe that we're going under 3. This will shift to the left as this year goes on. Not much doubt in my mind there. Interesting stuff. So what's the reason? What's the reason why are rate cuts so important? Well, one of them is consumer confidence, which we're going to talk about here in just a second. All right, let's get up to date on our trade updates. What we've got is we got 2 trade updates for you. This one on Bitcoin is pretty good. This is a pretty good trade. I'm interested. We just missed our election just once, and we're gonna sit around and wait and see if this one comes in. But I'm looking at 85,575. I believe I'm looking at 85, something like that. 85.25. We're looking for a hard test of this zone. And then a bounce. That's basically the trade idea. That one's still on the board. This one was brand new yesterday. This is going to be metals on fire, durable goods, surprise in the U.S. oil. Are we going to sell it? For me, yeah, I'm still sticking with my bullish bias, but there are some underpinnings here that are starting to mess with the dynamic of this market. A couple of things to know about U.S. oil. Number one, geopolitics always rules the day. So things like Iran, things like Venezuela, maybe even things like Greenland could potentially spike participation and make this into a market that goes bullish for a short period of time. Believe it or not, in about the next 3 weeks, we're going to begin pricing springtime seasonality in WTI crude oil. Typically, that brings some bids to the market. So by the end of February, we're typically seeing some bids hitting crude oil. Maybe they're early this year. I don't believe that. I think that this bullish bounce is it's problematic if you're holding shorts. That's why we were like, you can't really hold shorts. But this type of pullback is very opportune to take a short. So right there, I'm looking at that monthly 38% at around 63, 61. You've also got your EMA right up there, your 13-month EMA, which is up there at 66.37. I think that's potentially a fantastic zone to go short. So my key level was somewhere Right around 57. We're looking at 63, 57, somewhere in that zone. You could probably sell 63.50s and get away with it. I'm going to be a little more conservative with this entry, though. But I really like this pullback, have an opportunity here. I'm not bullish. I was actually contacted by an analyst the other day. I can't remember which platform it was on, but the gentleman was a commodities analyst and showed me all of his work. He was working with Heiken Ashi candles, and he was also working with the Ichimoku cloud. He really loved the Japanese approach to technical analysis, and he had this very elegant breakdown of what was happening in crude oil and why he believed it was going to head higher. I'm on the opposite side of that. I think that you're still in winter seasonality. I would love to scalp to the short. So for me, we're only looking for, about 53 ticks on this one. I think it's a pretty good shorting opportunity. And it looks like it may come our way. We're printing right now 62.01. The reason behind the crude oil rally has really nothing to do with the geopolitics. It doesn't. You didn't really see anything new out of Iran. A matter of fact, the news has gone offline out of Iran all of a sudden. It was in the news, and now it's not. Maybe we'll talk about that later in the week. I got to get away from some of those more depressing topics. Starting to weigh on me. Watching the news is not a fun thing to do these days. But 63, 61, I think that's a pretty darn good shorting area. The reason for the strength in crude oil right now is going to be your lagging dollar. Remember, commodity prices. Dollar goes down, commodity prices go up. Why? Because it takes more dollar to buy the commodity, and then also producers, institutional traders, they lean into commodities as an inflation hedge. So remember that. Dollar goes down, commodities go up. That typically is the name of the game. So we're looking at that as a potential trade idea. What do we have for today? Let me see. Tuesday was CB consumer confidence. Tomorrow, Bank of Canada Fed interest rate decisions. We'll have everything. We're looking for that. We just went over the Fed. The BOC expected to hold interest rates static as well. There's a heck of a fight brewing, though, between Mark Carney and Donald Trump. Both of them, they don't really like each other. Carney wants to do more business with China. Trump says, well, you should do business with China, but there's always a price to pay with Trump. He was floating 100% tariffs. That'll destroy the Canadian economy. If you put that big a tariff on especially fossil fuels exports, that'll shut the show down. So I'm interested to see what happens there. So we'll be looking for hints out of the Bank of Canada tomorrow and the Fed. That's a huge day. That's your red letter day this week. Thursday, initial jobless claims. I'm not going to really even cover it. We're going to do a live trading webinar instead, and that's going to have to do with how to trade precious metals. Friday is US PPI. That's a big number. PPI is a big number this week. I'm interested to see exactly where we go. I think we're going to have an opportunity there to make some pretty good trades on a Friday. All right, today is the CB consumer confidence. This is important. We're going to give you the quick and dirty on this because this is important today. I always say there's only a few events that truly move the markets. All right, you've got NFP, non-farm payrolls, that's a market mover. You've also got CPI, that's an inflation number, that's a market mover. A Fed interest rate announcement, that's a market mover as well. And anytime Jay Powell speaks, and honestly, when Trump speaks, typically moves the markets. Consumer confidence, it's not that it moves the markets directly, but it's the tone. It can impact sentiment. Most reports don't mean anything. They're within the margin of error. They're within one standard deviation of the norm. That means that who really cares? They're what I call sandwich numbers. Maybe they're above the previous release, but below expectations, or below the previous release and above expectations. They're sandwich numbers. They don't matter. This one mattered. This one jumped off the page at me, and I went, whoa. That's a big number, and there's a couple of reasons for it. In any case, the CB Consumer Confidence Index, the CB is a conference board. I said chart board in on my write-up today. I've heard it called the chart book. I've heard it called the chart book, conference board, whatever. CB Consumer Confidence measures the level of consumer confidence in economic activity. It is a leading indicator and can predict consumer spending, which plays a major role in activity. Bottom line is this. When consumer confidence lags, that is viewed as being a leading indicator of recession. Why? Because when confidence is gone, people save their money, they stop spending, economic growth grinds to a halt, and the economies start to contract. That's it. Lagging consumer confidence is a big problem. Big problem. All right, so here you go. This is what we had today. CB consumer confidence, 84.5, horrible number. And I mean horrible. That's about as bad as I've seen maybe ever. 84.5 is horrible. You can see right there for January, we were looking for about a 90, and then December's numbers were revised up to 94.2. So right now, the consumer's not feeling very good. Essentially, this is a survey metric. People are contacted in one way or another. I don't know if this is a telephone or an internet survey, but they contact a bunch of people. They talk about how they're feeling, ask them a bunch of questions, probably give them a gift certificate or something for their time. And then this is what you got. You have a decimalized figure, which gives us a barometer of where we're at. Right now, people don't feel well. They don't feel good. A lot of it's high prices. A lot of it probably is the domestic unrest here in the United States. Very interesting. A couple other events to watch later today. API weekly crude oil stock. That's not going to do much, but you can keep an eye on it later today. We're looking for stocks to go down a little bit. I don't know. We'll see. And then monetary policy meeting minutes. That's interesting to me. I think you have an opportunity potentially there to get something out of the yen. And then the U.S. Trump speaks. He should be speaking here in about 5 minutes or so. So you've got to be able to get that going. It looks like my live chat went off again, so I'd like to thank Restream.io for that. I don't know that it's going to reload. If it doesn't, we'll just take one more question. In any case, what we want to do right here is actually take a look at the consumer confidence numbers. U.S. consumer confidence fell sharply in January. All right, the latest press release, confidence collapsed to its lowest point since 2014, surpassing pandemic depths. That's horrible. Since 2014. Right here, the Consumer Confidence Index fell by 9.7 from an upwardly revised. A 5.1 upward revision to December's reading of the index resulted in a slight increase last month. Ugh. The Present Situation Index, this is what I want you guys to take away because this is what's truly astonishing from this. The Present Situation Index, based on consumers' assessment of current business and labor conditions, dropped by 10 points, 9.9 points to 113. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market, fell by 9.5 points to 65.1, well below the threshold of 80 that usually signals a recession ahead. That's not good. Now, there's a couple of ways that these numbers could be skewed. The first way that they could be skewed is the immigration. Where did these sample sets come from? As far as labor market situation, did you contact people that viewed the immigration crackdown as being detrimental to the labor market? You could definitely make that case. I could make that argument right now. Does it disqualify the report? I don't think so. Sentiment's low right now. Prices are high, sentiment's low. Remember this too, you're also in the dead of winter. So when you're looking at something that is a January number and it's confidence, people are pretty much depressed, holiday hangover. We're going to have to see if this trend holds, though, going into February because it is ugly. This was very ugly. All right, so what we've got going here is our long-term chart. And this is a point that I've made over and over and over again, and we're going to end on this note. Going back to 2007, 2009, so there's your consumer confidence. Really rallied out of the depression. I call it the depression. It was the biggest recession of my lifetime. Absolutely terrible what happened back then. Consumer confidence was very low. It was a financial crisis. Took forever to fight out of that thing. Tell you were sort of up here, feeling pretty good about things. And then what happened? COVID. Since COVID, consumer confidence has never come back. It's never come back to the pre-COVID levels. Right there was the plunge. You saw the rebound. And that's when everybody said, what? Why do you think consumer confidence was high right there? All right, pandemic's over. Business as usual. Time to get back to work. It's going to be great. Things are going to be great. Better than they ever were, right? And then confidence started to erode. And right now, it doesn't look to matter which administration was in the White House. This stuff right in here, this was pretty much during the Biden administration, and now during the Trump administration, the second one, it's still tanking. The reason why this is tanking, inflation. In a word, inflation. Housing prices are out of control. Automobile prices are out of control. Prices for food are out of control. There's no question about it. That in itself has destroyed consumer confidence in the United States. I can make a case that it's never coming back and that you're going to see levels potentially settling over the long haul down here around 60. And if you start to see those types of numbers, we will enter a recession. There's no question about it. Now, what the Trump administration is going to try to do is they're going to try to cut interest rates, and they're going to try to throw so many dollars into this system that it's going to ensure economic growth. It's also going to ensure inflation. Now, whether or not the economic growth will offset inflation and actually spawn global economic growth, or maybe we may be going into an era where instead of the entire globe growing, on a pace that it really was during the pre-COVID years, you may just go into regional growth. Some regions may be good, some may be bad, and I believe we're already seeing that. So today's consumer confidence numbers were horrible. They were horrible, and I'm not a doomsdayer, a doom scroller, or really, I try to dwell on the positives. Last Friday, I told you a horror story about somebody getting absolutely crushed by going home short gold. It was sort of a serious talk. You know, this is another one of those on that tone. This is a serious situation. And the United States Federal Reserve tomorrow, they're not going to cut interest rates. They're going to keep them high. I believe Jay Powell is going to cite the PCE figures as being a bit alarming. He's going to say that the risk to inflation is going to be difficult to justify raising. They're going to be data dependent, but none of that's really true. What's true is that the Fed is in a situation where they know that inflation is entrenched. They also know that they're all getting ready to hit the road and go do something else. I think we're in a holding pattern until June. I don't think the Fed's going to do anything to try to help out confidence until June. So, long story short, the U.S. dollar weakening right now are the institutions getting ahead of the dovish policy that more than likely is going to be aggressive towards the end of this year. Now, listen, I could be completely wrong, and that's okay. At the time, believe me, I don't run from being wrong. I lean into it. I go, I was wrong about that. That's the beauty of being a trader. You don't have to be right to be paid. You just got to nail your entries and manage your risk, and you're going to be just fine. But towards the end of this year, you're going to see some dovish policy. It may be swift. I mean, if you don't get a rate cut for the next 3 meetings, the rate cuts in June could be significant. And in my opinion, that's what you're seeing right now. That's what you're seeing right now from investors. They're getting out of the dollar. We'll see what happens, guys. Complex situation. All right, everybody, I think I'm going to go ahead and, our live chat's back up and going. I'm going to go ahead and check it out, and then we're going to go ahead and hit the door here. I've been going for an hour. You guys enjoy whatever Trump has to say. God only knows what he's going to say. Let me see. You're welcome, T. Marina. Let me see. Abdi. Hello, Shane. I saw your video on the 9 EMA. Is it good for the Dow Jones, and what time frame is the best? It's funny. I just made a redux on the 9 EMA. I'm not sure where it's going to be released, but I went through and covered it again and showed some trading examples. Yeah, you can absolutely use it on the Dow Jones. Matter of fact, I would recommend that you choose things that are moving, that are volatile. The biggest thing to remember with the 9 EMA is try not to fight trends. That's sort of where our RSI confirmation comes in, and also our session times. So for a time frame, if you're going to trade in a swing approach and you're going to trade a 4X pair swing trade, 4-hour chart's pretty good. If you're going to trade the Dow Jones, the US 30, you need to be looking at that U.S. session. Definitely need to be looking at the U.S. session. I love the 30-minute chart. Unfortunately, for the U.S. session, it's probably going to set you up for sort of a swing trading approach. You're probably going to be in a lot of those trades longer than one session, especially if you're looking to catch big runners. But I really like the 30-minute with that type of strategy. I think you can go down to a 5-minute chart with the Dow 30, the US 30. You need to focus, though, on those, probably the 2 hours, I would say, or the hour and a half to 90 minutes after the U.S. cash open. And I would be very, very careful trading like a 5-minute chart during the U.S. cash open because you're more than likely going to get chopped out. But you could definitely get in on some big runners. I've had great feedback on the 9 EMA. We had a comment the other day. Somebody said, "Hey, I've been crushing my funded accounts with just the 9 EMA in the first 2 hours of the U.S. session." So that's what I would recommend, Abdi. If you're going to trade the US 30, I would be looking at probably a 30 and a 5-minute. 15 minutes good too, though. You could go 30-minute, 15-minute, 5-minute during the US session and probably be okay. I would focus on that London-US overlap, though. I would start my trading probably right around 9:35, the first price bar after 9:30 Eastern, and take that right up until probably that first 120 minutes of the session. That's a good place to begin. The other thing you can do, guys, is don't forget about AI. Get that AI going. Get that algo builder going. Go on ChatGPT. Start coding these things. Code a strategy. I mean, I'll show you a very basic strategy. I think I've got it running still. Let's see, what could I do here? It's something that I coded. just off the top of my head the other day. I'm not going to release this to the public just yet because I don't want everybody I don't want everybody trading it. But let's go ahead and let's check my okay, so this would have been something that I did on ChatGPT, the hyped up version, the pay version. And essentially, this is what I did. I refined my risk versus rewards according to the strategy. I've also figured out ways, to mark the chart. But this was basically my 13 EMA crossover with my Bollinger Band midpoint and all my special settings and everything, secret sauce or whatever. And I was looking at different chart durations. This is a gold futures continuation chart. This acts a lot like, let's see what's it printing right now. It's a lot like your spot gold market. Trading 50.79 right now, and you're trading 50.81. So this is a lot like your spot gold, and the results were pretty good. I mean, they were astounding, and essentially what this was a system that goes back to November, right? 5-minute chart, I believe. Let's see, what is the exact name? No reversals. So basically, you're just playing one position out, and you're really focusing on that U.S. session. And there it is. I mean, that's no jive. That's exactly what everybody wants to learn how to do in these markets, is nail them like that with a system. It'd be really simple. I mean, it's very simple to do. Crossover buy, get out. I've got it. I've got my my targets. My stop loss defined, my profit target. It's all right there. What makes this fun is messing around with the time frames. So this goes back to October to January 27th. Let's go to a 1-minute time frame. Now you'll notice on the 1 minute, look how many trades you had. 154. So what is that? Pretty much taking one position a day, something like that. Profitable trades. You still got a real nice thing, but you'll notice that when you start messing around with the durations, you find a sweet spot. So this 15-minute chart actually produced more trades than a 1 minute, because those 1 minute charts get you into trades and don't let you out of them, right? The 15-minute gives you a little clearer way in, and you'll see right here what you're right about scratch, 45 and 50, right? And a lot of that has to do with how long you're in the market. So let's step back to a 30-minute, right? How about a 30-minute? You can see you've got all sorts of things happening here. What do you got for profitability? It's a banger. 52% profitable trades, 198 total trades. So basically you're making a trade pretty much every session. So there's a lot going on here, maybe multiple trades per session. So there's a lot going on with things like this. To me, I said, okay, is the 30-minute the best, or is the 5-minute? And the 5-minute essentially is what I came up with. 25,000. It's pretty good, and that's on one lot. So you start talking about taking multiple lot trades and all the different ways you can scale out. Let's go ahead and see the script here. So this right here would be your Pine script, and this is what you're looking at. So there's all sorts of different ways. I've got my stop loss dialed in. I've got my my gold, purple. I got all this stuff, cross up, cross down, things like this. My strategy, my entry, my exit. Look at my risk versus reward multiple. My multiple right there was an even money 1, but potentially you can move that up to 1.5, 2. You've got all sorts of different things that you can do. So you've got to really understand, or right down here, I guess, would be your risk versus reward multiple. You'd really be looking to refine a strategy like this over time, and it can be very difficult to do if you don't know what you're looking for. So that's what AI has done for us, going on and building something like this and just refining it. Now, before everybody gets all excited and says, Shane, you found the Holy Grail, take a look at this market. This is gold. This is gold over what? Probably one of the biggest bull runs in history. I guarantee you that the performance more than likely has to do with, the performance probably has to do with the long trades, not the short trades. You can see, what do you got? A long couple of, there's a short loser, there's a long loser, there's a short winner, there's a long winner. You would love to be able to sort this by, short or long. And I guarantee you that the majority of your profits came from, your long trades. Like right there, boom. You got crushed there on the short, then you came back and won the long. So there's a lot of different ways to skin a cat. That's sort of a preview of what I do in my spare time. I'm looking to code and I'm looking to build these strategies all the time. You're always looking for an edge. And the one thing that you can do with that is you can go through the AI in anything you have in your head. You can just normal language, go to your AI platform, plug it in and get it going. And you can build a lot of things like that on Algo Builder too. Free service for Switch Markets traders. So you can do anything you want. For that, no, hey, Bobby, I'm not going to release the code. No, I'm not going to release the code on that one just yet. I've got some more refining to do. We may release it as a strategy, but I'm not. I've got to go back. I have to make absolutely certain. And the problem with releasing a code like that after I've showed you the back-tested results is that it's going to look like a signal provider, and I'm not a signal provider. The reason why I showed you that is I want everybody thinking about how to build their own strategies. That was just an idea I had based on the public domain stuff that I use. I said, man, we do a lot of work on crossovers. Why don't I do one with the 13 EMA in the Bollinger midpoint? When framed properly, it took the right filters. We had to find the right time frame. We had to find the right time of day. We had to talk about profit targets and stop losses. We also had to have dynamic parameters in there. So the whole point is just there are edges out there that you can get. You just have to be getting in there and refining them. Personally, looking back at the pricing, the price data and everything, I would have to make sure that it's all on cue. But remember, you're going to see a lot of people that are trying to sell you things like that. And remember what gold's done over the past several months. What has gold done? It's rallied. It's absolutely rallied. That's why the numbers look so good. Will it be good in the future? We don't know. It may not move. If it doesn't move, those are probably going to be losers. All right, everybody, I'm going to go ahead and sign off. We got a couple of questions left, but I've gone way too long today. Let me see. So I hope that helps. That's a 9 EMA. Let me see. T. Marina, Shane, copper's seen more as traded as a commodity versus a metal. Yeah, it's a commodity. Copper's a commodity. You hit it absolutely right because of its huge demand in manufacturing. Let me see. One of the few that shows zero BS trading approaches. Thanks. You're absolutely welcome. Italian expat. You're living in Italy? Wow. Good for you. Right on. Always wanted to go. I've never been. For COMEX future on gold and nowadays silver, always look at the CBDR and the LBMA fixes versus the CGE fixes. That's fascinating. I tell you what, Italian, why don't you head on over to How to Trade, get your free account, send me a private message, and sort of tell me what you're talking about there. That's for sure. Let me see. T. Marina, yes, indeed. The 9:30 a.m. opening range in New York session bars have a ridiculous momentum. That's what you'd want to key on there. That's for sure. Let me see. T. Marina, Shane, can you do a primer on trading the New York opening range session with the 15-minute, the 5-minute, 1-minute time frames? Yeah, we'll have to do that maybe. Trading the New York opening range session. Yeah, we probably need to build we've done it with the 15, the opening range breakout. Maybe we'll do it on shorter time frames as well. Let me think about that, T. That's a good idea, though. All right, we got one more question here. Let me see. Gordon Williams on the Great Britain Pound USD. Should I be long with the current trend? It's at 82% on the. It's at 82 on the RSI. Well, I mean, yeah. The thing about an RSI is that it doesn't necessarily predict reversals. So, Great Britain Pound USD, we're printing about 137.80 right now. 30-minute chart. I mean, this essentially is your intraday time frame here, right? 30 minutes. So you go right back here to 8:30 a.m. Eastern. Spike low right up there to that triple top. Yeah, I don't know, Gordon. I mean, to me, it's really it's what I call dirty. I mean, this is really dirty up in here. This is just sideways action. For most of the U.S. session, I would expect sort of participation to dry up here over the next several hours. I would be careful with this. I would be careful. If you're not already in, I mean, if you're in, you're probably holding longs. That's pretty good. But, you know, we have a pretty good idea of what's going to happen here in the gold market, and you're seeing a significant pullback right now. So it's hard to say where it goes from here. If you're going to buy in, I don't know that I would buy in right now, though. I don't think that I would do that. I would wait for a deeper pullback and get better trade location. As far as the RSI, remember that RSI does not predict reversals. It's supposed to tell you when maybe you're in a situation where price action is going to slow down a little bit, overbought or oversold. Remember, a trending market typically stays up in that overbought or oversold area for a long time, and that's why even the creator of the RSI, Wells Wilder Jr., didn't believe that you could trade the RSI on its own. You needed confirmation. So be careful with that. Yes, the breakout. Yeah, we'll take a look at it, T. I'll write it down short time frames. Let me see. Don't buy right now. User K. I think that I would stay out, Gordon, if you're not already in. If you're already long, you could do it. But if you're not already in, I don't think that I would go right now. I think it's high risk. I really do. Okay, everybody, I'm going to go ahead and sign off. We went way long today. I hope you enjoyed the live stream. Tomorrow, FOMC Live will be back and ready to go. 10 minutes before the release, I'll break down our expectations, talk a little bit of smack about Jay Powell, see what he's going to do, what color tie he's going to wear. There's going to be a lot going on tomorrow. You're going to hear a lot from the financial media, and it's not all going to be positive. It's not all going to be positive. It's probably going to be extremely negative, at least out of the White House, and then the media will start attacking Trump over his comments, and then it'll just turn into a mess. So we're going to cover it. We're going to trade some live. We're going to make some live trades tomorrow during the presser, and then we're going to go ahead and see exactly what Jay has to say, maybe break down a few of his comments, and I'll give you my opinion on it. I typically do, and might even heckle him a little bit if he deserves it. All right, everybody. Have a fantastic trading day as always. Trade the action well, and we'll talk soon. See you.